For most Americans, late January to March is very significant. It used to play a much more important role in me and my brother's lives when we were younger. It was almost as important to us as a second Christmas. We run downstairs on the weekends, go straight to the mailbox. As soon as we get off the bus in the evenings, go straight to the mailbox. We were looking for something. Open it up, look in it. What do we have? A letter from grandma, wondering why nobody visited her in a nursing home. Trash. A letter from our Uncle Charles, who's about to get out of jail, needs a place to stay. Rip. What else? No letter yet. We still had to wait. And a lot of people, about 20% of Americans, have to do the same thing. We know we were looking for that little letter that used to come in the mail. They don't do it in the mail anymore. Now they do a direct deposit. It was from the U.S. Department of Treasury. It was a white envelope, had a little brown piece of paper on the inside, set right across the top. We used to grab that letter as soon as it came, go straight to the kitchen, put on a hot kettle, steaming water, try to hold it over the stove so it'll heat up so it can be open and closed again. It's that tax return if you don't know. If you don't know by now, we were looking for a tax return for our parents. You see, the tax return had a lot of significance when we were growing up, like I previously stated, because it basically determined what type of summer vacation we'd be taking that year. If they got a decent tax return, it'd be great. If they got a bad one, it'd be bad. And that's why I decided to create this piece of content, mainly because I wanted to show how the new taxes that we're filing this year is affecting how I file my taxes. And also, when it comes to healthcare employees have certain things that kind of alter or can stipulate our year-end earnings. So I want to just give a few tips to help you work less and gain more. All right, everyone, good day. Here's the finances. If you don't know me, my name is Roderick. I work in healthcare, and I savvy myself sort of a person who's interested in finance and also finding life balance. Feel free to subscribe, ask any questions you feel may be relevant. Ask your irrelevant questions as well. They'll be answered just as importantly, but why? What I decided to do was to make this a 2 to 3 part content creation because I didn't want it to be too long-winded. So I'm going to try to keep each part to about 15-20 minutes and below. That way you can kind of take a breather, as well as it allows me to gather my thoughts more adequately. I'm going to basically break down changes that may be approaching for the 2019 year, as well as filing tips and how it's changed a little bit for independent contractors and people of the gig culture. So in the first part, I wanted to look into the tax breaks for 2019-2020. And before getting into that, I need you to understand a little bit about CPI. That is a Consumer Price Index. The CPI is what's set by the U.S. Bureau of Labor and Statistics. It determines how much the average consumer is spending on goods and services throughout the year, if that's increased or decreased in the financial quarter. Now, how that affects us is it essentially what you spend on goods and services is your cost of living, how much you pay to live on a daily basis. So that's how the IRS determines what they do as far as tax breaks and as far as increasing the amount you can file in deductions, which play a significant role in you filing your taxes and what you receive from your tax return. Me, I hadn't received a tax return in a while, but I'll explain why, and I'll explain how towards the end of the year I can do things to shape and manipulate my earnings working in healthcare that will allow me to have more deductions as well as being taxed at a lower rate. When the CPI was released back in September, it showed marginal differences between the last fiscal year. Basically, what that means is they didn't have to adjust much for inflation as they did in the previous year. And one thing that we have to keep in mind and that understand is that U.S. tax rates are marginal, which means that you can be a person making one income and be taxed at 2 different rates depending on how much you've earned throughout the year. For example, if you've earned $60,000 as a household in 2019 and you're married filing jointly, the first $19,750 is going to be taxed at 10%, while the remaining amount of that is going to be taxed at 12%. So I'm going to put up a screen showing the tax brackets for this year. and I'll just explain through it because it's a lot of information and it's better for some people who like to visualize as well as listen. So I'll put that up and just talk through it. So for individual taxpayers, for $0 to $9,875, you're being taxed at 10% of your income. For married, $0 to $19,750, you're being taxed at 10% as previously stated. What's important to look at is as you get to the higher grossing incomes. For example, if you're at $207,000 to $500,000, you're automatically being taxed at $47,367 plus 35% of everything over $207,000. So that means that 35% of your income past $200,000 is automatically being taxed at the same rate, which helps in some cases, but in some cases it can hurt you, because what if you barely make over that $207,000 and all of that additional income is being taxed at a higher rate, and as opposed to someone who's made $500,000 and is being taxed at that rate. So it can help and hurt you depending on how you file and what your deductions are. So if you look a little lower at trusts and estates, these are how much you're being taxed for your gains, as far as things that have been left for you to your estate or in a trust. And they play a significant role for people who may have inherited something throughout the year, and you have to file taxes on that inheritance. If someone leaves you a trust who's passed, or if someone gifts you something of significance, you have to file taxes on that. And the main purpose of this first video is so that people have a good understanding of margins, because we're taxed marginally, which means that you can, if you can dictate what you earn throughout the year, you can kind of dictate how you're going to be taxed. Because if your deductions don't change much, but you can alter your income, that means that you have a better chance of being put into a lower tax bracket as opposed to being taxed significantly more. So for example, let's look at the $9,876 to $40,125. And this basically applies to individuals or married filing separately because it counts as one income. If you take a look at $40,125, the difference between that and what you're taxed at $40,126 is basically double. So what that means is if you can earn less than $40,000 or around $40,000, you're being taxed at 12%. It's a low tax bracket, but it's the highest of that low tax bracket. So you're being taxed at 12%, as opposed to if you earn $40,130, then your tax bracket changes completely and you're almost double what you're paying in taxes. As you increase in income, these margins separate slightly. So that has significance pertaining to a person like me, because my earnings towards the end of the year, I pick up a lot of overtime shifts as well as a lot of other healthcare workers. It's always overtime. It's always ways you can earn extra money. You can work at different places. You can be on call at different places and still get paid for being on call. So these are things that we kind of use on our side to help get more income. But it kind of hurt me this past year because what I earned as an individual was around $86,000. Which is good, but I was taxed at 24% as opposed to if I were to earn $85,000 and be taxed at 22%. So while I may have earned an extra $1,000 than what I needed to, I'm paying more in taxes overall. So I could have worked less and made more money. So capital gains will not increase for 2020, but the brackets and rates will change. Most taxpayers pay a maximum of 15%. 20% tax rate applies to the extent that taxable income exceeds the threshold set for the 37% ordinary tax rate. What that means is if you made well over $100,000 this past year, shout out to Hunter Biden. He had a great year this year, apparently, consulting. So he was taxed at around a maximum threshold of 37%, and everything else he was good to keep. Also, I failed to mention previously that a significant portion of this information is coming directly from the IRS website. Also, I gathered a little bit from Forbes because they actually broke it down in great detail and put in a lot of great links. So I highly suggest, if you need more information, going directly to the IRS website, as well as checking out Forbes because they did a great job. Also, before I end this video, I wanted to put in a little tidbit about standard deductions. Your deductions play a significant role in how you file taxes and what is counted as deductible income. So it's not taxed as severely as your regular earned income. And because in 2008, as I previously said, the deductions almost doubled, which was great for everyone when you were filing. This year they hadn't changed at all. They're still the same. Also, quick things to note are that you should be contributing to charitable giving. You get great deductions for charitable giving, as well as your insurance premiums and your life insurance are great deductions. So you need to make sure that you keep track of those and that you file those on your 2019 tax return. So I think this is a good stopping point. As I said earlier, I really suggest people going on the IRS website and also going to Forbes website. They go more into detail about things like federal tax exclusions and gift tax exclusions, which are also important. But I didn't want to gravitate too much into those areas, even though they are going to be in the latter portion of your tax filing. Let me know in the comments below if you feel that you do need more elaboration on said topic, and I will make their own separate video. For the second video, I think it'll be on tax refund schedules and also when you can go about filing your tax returns. So for now, here's the finance, here's the life.